Hey everyone, AliBaba stock investors got some big news regarding share buybacks and earnings per share prospects that I wanted to go over in this video. And I'll also discuss what this means for AliBaba stock investors, and I'll update my buy recommendation for AliBaba stock. So let's take a look at these figures. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so AliBaba updates investors on their share buyback program. And if you don't already know, what a share buyback is the company going out into the market and buying back shares of its stock. So purchasing its own stock. And what that does is that reduces the number of shares outstanding. And when you reduce the number of shares outstanding, the existing profits from the company are split between fewer shares, and so it has the effect of increasing your earnings per share. So that's why companies do it. They mostly do it when they feel their shares are undervalued, and the money that they use to buy back shares, they feel is a better use of that capital than using that money to increase any line of business or a new project or any other use. So for management to go out and use that money to buy its own stock back, it means they feel the stock is undervalued in most instances, and especially in this instance because Alibaba shares have been undervalued for so long. I've highlighted all year long that Alibaba's stock is relatively cheap. In fact, I've had Alibaba stock rated as one of my top 25 stocks to buy all year long. I had this rating on December 30th, and I last updated this on March 31st. So I've felt confident that Alibaba's shares are undervalued, and I'm going to show you a comparison of why I felt that's the case. But going back to the share repurchases. Now, I already discussed why companies buy back shares and how it impacts investors and existing shareholders. Now let's look at the numbers. So what you see here is the repurchase amount on the top level here for Alibaba. And in their latest quarter, which ended March 31st, 2024, they bought back $4.8 billion worth of its shares. $4.8 billion worth of its shares, the most in any quarter going back the last 8 quarters. The second most they ever bought was $3.5 billion in June 30th, in the quarter ending June 30th, 2022. And this time they bought $4.8 billion in shares, so roughly 33% more than they spent during that time. And this had the effect of purchasing 65 million shares, or in other words, reducing the share count by 5.1%. So now they have 2.4 million shares outstanding, 2.434 million to be precise, and they've been buying back shares for 8 straight quarters now at the least, and that's reduced their share count by roughly 10% overall, from 2.648 million, down to 2.434 billion. And that's reduced the number of shares outstanding, so that leaves a greater earnings per share for existing shareholders. Now, what's more is they still have 31.9 billion available in share buyback authorization. Let me show you that number here. 31.9 billion authorization, and that's effective through March of 2027. So they can continue buying back shares all the way through March of 2027, and they can spend up to $31.9 billion to buy back their shares. If they feel their shares remain undervalued, they'll likely continue buying back their shares. If you're asking how are they going to get the money for this, they have more than enough on their balance sheet. I'll share that with you a little bit later in the video. Now, I also said I would discuss the undervaluation. And if you look at Alibaba stock here, I've compared it to 4 other e-commerce type companies in Amazon, Sea Limited, Coupang, and Mercado Libre. And these are all e-commerce companies in different parts of the world, in the US, in Southeast Asia, in Korea, in Latin America. And you see the different valuations according to the forward PE ratio of these different e-commerce companies. And you'll see that Alibaba is trading at a fraction of the valuation of the group. It's trading at a forward PE of 8, when the next lowest is C Limited at 22, Mercado Libre at 32, Amazon at 34, Coupang at 35. So Alibaba is trading at a fraction of its valuation compared to its peers. Now that's understandable because Alibaba has demonstrated flat to negative earnings per share growth, while the others have demonstrated excellent earnings per share growth. Most notably, you can see Mercado Libre here with expanding earnings per share exploding, not even expanding would be the better term for Mercado Libre, while you can see Alibaba at 5.486 is less than where it was in 2020 and roughly where it was in 2016 in terms of earnings per share. Amazon has also demonstrated excellent earnings per share growth, as has Coupang, and C Limited is returning to earnings per share growth in the recent year and a half after excellent restructuring plans and cost-cutting plans have improved its profitability. And to make matters worse for Alibaba, analysts that are following Alibaba stock, they think its earnings per share are going to be relatively flat for the next 5 years. They are forecasting that Alibaba's EPS will grow by just 1.42% over the next 5 years. So you can understand why Alibaba shares at a discount to its peers. And then on top of all of that, the economy that it operates in, China, is going through growing pains as its reopening from the pandemic has not gone as well. And then the geopolitical concerns regarding China and the US is really hurting export growth, and the economy in China is not growing as well as people were expecting. So all of that is contributing to Alibaba's cheaper than peers valuation. But I think that discount is overdone. I think it's overdone. That's why I've recommended Alibaba stock as a top stock to buy. I've admitted it deserves a discount to its peers, but I feel that the discount it's getting is overdone. So I feel there's value there in Alibaba stock. Now, I also highlighted, I would share with you the balance sheet, and you could see here Alibaba has roughly the same amount of cash on its balance sheet as Amazon. It has $86 billion in cash and short-term investments, roughly the same as Amazon, while its peers have significantly less, $5 billion, $5 billion, $3.75 billion. And so you could see it has plenty of money to fund this $32 billion in share buybacks. And the company continues generating strong free cash flow that it can also add to its balance sheet, that it can then also fund growth in its share buyback. If it feels the shares are undervalued and it wants to increase the buyback, it has enough money to do so. For those reasons, I think Alibaba is a good value here. That's a huge increase in the share buyback, growing from the previous quarter buying back just 37 million shares up to 65 million shares. A strong indication from management they feel the shares are undervalued. So I'll reiterate this recommendation in today's video and remind everyone that I still feel Alibaba stock is a top 25 stock to buy. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.